A very warm good afternoon to everybody. So here we are again into our cult. That is the today's session. And today we have modified our black report, and to make this session more concise, we have given everything in this report in a very detailed manner, and the plan to action is also given so you can apply it practically into your trading. So without wasting time, now I'm not going to bore you discussing the economic calendar and what it is telling. Instead, we have given the informations, news, datas, and how it will have an impact, and as a trader, what you need to do. So everything is given into this report. Those who are watching this session on the YouTube, they can find a PDF file into the description box and they can download it. And those who are the existing client, they'll get the copy of this from our official channel, which is the official Telegram channel with the name BMN Insights. So without wasting time, let's start today. That what kind of news, new developments which we have to keep into consideration if we are want to really make good dollars from today's market. So this report consists of 7 sections, right? So first we're gonna discuss the section one, that is the executive summary. So over here you'll get the juice of this report, that what exactly I'm trying to present over here. So the dominant micro financial theme of March 2026 is the Strait of Hormuz. Those who don't know, this is the US-Iran-Israel conflict, which is right now going on. And this is a small, tiny place, right? From where the 20% of the crude oil used to travel, right? And because of this issue, this sea route has been blocked right now, and which is impacting all the global economies. Now, as we have seen that all this episode have started from the 20th of February, right? And approximately 20 million barrels of oil transit daily from this route, right? So this will have a great impact. Apart from this, we have the CPI data also, right? And every timing over here is being given according to the Dubai timing to help you. The second most important event which we have is the CPI data for today. And the most important and most catalytic event, which is the G7 emergency energy meeting, which is going to be held according to the Dubai time at 6 p.m. Right? What you have to do, we have covered over here, right? Now, just have a quick market snapshot that how the Wednesday has started and how the different asset classes are being performing, right? So for the gold, here the key level, the direction is ranging right now. But yes, because no clear direction is coming just by looking into the neck charts, but we have given a lot of informations to reduce all the noise and give you the clear picture of the market. Bias is the bullish, right? And the volatility would be quite high. For silver, the same thing, but over here the volatility will be very high. Then comes to the crude oil. 100 barrels is the key level, which is also the psychological mark. The direction would be volatile. That means it's totally depend on the upcoming G7 emergency meeting, right? If they find a solution, oil prices will fall down. If there is no solution, no diplomatic talks, then prices will shoot up, right? So its biasness is more event driven and extreme. How to trade this, we are going to cover in the later part of the report. Now comes to the DXY. So the key level is 104, right? I've told you 104 is very aggressive, high probability that from there the correction is into the picture. The DXY direction is more CPI driven, which we have today, right? And the volatility which we are expecting is very high, right? It's high. For the S&P 500 and the indices, right? So for the S&P 500, we have the recent negative 2% fall into the prices. Right now, high probability that prices move sideways, right? And this CPI data and the G7 both will have an impact on this prices. So you'll find zigzag movement, and the movement uh, range would be quite high, and that is the reason we have given the high volatility. Then for the US 10-year bonds, right? So yield have rised to 4.11%. Rising yields means the biasness is bearish, the volatility will be high, right? And they have a direct relation with the gold prices, right? If bond yields more, we see strength coming into the bond yields, then it is an indication that safe haven asset demand of gold and silver is going to deplete, right? So this is very important. And the last, we have the Bitcoin. So the macro stress and especially the energy prices are playing the most important role right now to giving the new trajectory to the Bitcoin prices, right? Currently, on a longer time frame, the trend is toward the sideways, right? Trade with cautions, volatility would be high. Comes to the odd USD because in the upcoming days we have the RBA meeting minutes, right? The interest rate decisions which we have, and currently the odd USD pair is trading at their multi-year high, right? The trend is uptrend. Biasness is bullish and the volatility would be high. Now comes to the USD JPY 150 to 152 is the mark, right? Which we've been expecting as a will act as a important key pivotal area. Yen is getting weaker. USD bid and the CPI data will bring more uh, volatile movement into this prices and give the clarity. The volatility which we are expecting is moderate. Now moving on to the next section, and which is the most important, and this is the section in this I've covered the top most important market moving developments, right? So starting with the IEA proposes largest. IEA is the International Energy Agency, right? So proposes largest ever emergency oil reserve release. Three dots means it's very extreme news, right? It have everything to change the market trajectory. So the situation is that the International Energy Agency is weighing a coordinated release of strategic oil reserve. So strategic oil reserve, right now, every country is planning their strategic reserves, and although US is already have a very strong reserves, the important thing which we need to focus is that oil reserve that would surpass the 182 million barrels released after Russia invaded Ukraine, right? So this is the previous thing. Now, currently the prices have surged as much 40% since late February from the start of the US Iran, right? Briefing breached the $100 mark for barrel, which is way high. Now, why it matters, right? This is a historic market intervention event, right? Where all the countries are coming together and they are intervening into the energy market to control the energy prices, right? So, any sustainable movement when we have a mass hysteria that the oil prices will go down and all of a sudden there will be a fall into the prices, right? This is going to happen. So, today in the G7 meeting, there will be new market trajectory is going to be formed, right? So if there is any kind of approval coming out of the G7 meeting, then 300 to 400 million barrels released would be significant, and it will put downward pressure into the oil prices, right? A lot of tankers are right now waiting to pass the Strait of Hormuz, and if there is a supply smoothness, all of a sudden the market would flood it with the supply and all prices will react negatively. If rejected, so this would be the alternative scenario. If rejected or delayed, oil could quickly retest and exceeds above the $100 mark, right? What as a trader you need to do? Wait for the 6 p.m. Dubai time, right? When the G7 announcement is done. Once it is done, then plan your entry. You are going to make consistent profit. If you are an intraday trader also, then too, right? So if release confirmed, short oil which stops above 102. If rejected, buy oil dips targeting 100 and 105 mark, right? Do not reposition heavily. That means do not take very heavy lot sizes. Second important, that is the G7 emergency energy meeting, right? Just to have an idea, already we have discussed that what they are going to discuss into this G7 meeting, what is the agenda of this meeting, right? So it is happening because of the ongoing Middle East conflict, right? This follows a Tuesday meeting where G7 energy ministers failed to reach consensus, right? So no result is coming out from the meeting and defer the matter to the IEA. Today's meeting will determine whether the largest strategic oil reserve drawdown in history proceeds or not. If this happens, then why this matters already we have discussed, right? Dollar 10 to 15 points of movement we can see, right? oil could crash, right? So for the downside, if oil is trading at 92, all of a sudden there will be a sharp fall of almost $10. And apart from this, we have the US inventories data also, right? 6 p.m. is that crucial time that you have to watch, and all of a sudden there will be a sudden fall into the prices, right? You can hop into that moment and get out of the market very quickly if you are gaining very good profit, right? So this is a very good opportunity creating into the energy prices. Moving on to the inflation data for the US. So the Bureau of Labor Statistics is going to release their February CPI data, right? Now the headline CPI is forecast at positive 0.3 on month basis and 2.4 on year basis, right? Now CPI is the most important monthly data. It will have a lot of things revolving around which will impact the market psyche. Those who are trading into the interest rates, the interest rates trajectory could be changed because of this data. So a hotter than expected print. That means we've been expecting 2.4%, and if it comes positive, 2.7% on a year-on basis, but reprice Fed rate expectations higher, right? Strengthen the dollar and crush the bond market, and bad for the gold prices also, right? Pressure gold, right? And stocks. A softer print, that means 2.4% is the expectation. If it is comes lesser than this, then weaker dollar, higher gold, buy the dip of gold and hold your positions, right? And equity relief rarely, right? There might be a recovery into the equity prices also. As a trader, stop trading 15 minutes before 4:30 p.m. according to the Dubai. After release, wait for 5 minutes, let the market react, let the tide settle. Once everything is settled and normal, then take, right? So the initial spike, whatever spike you'll see into the prices, especially if in gold or into dollar pairs, that is going to exhaust. So this is not the right strategy that at the release, right? When you see a volatile movement, don't try to catch that movement, right? Wait. So hot CPI if comes, long USD, short gold, dip to 5052 is expecting. If soft CPI, then short USD, long gold above the 5208 mark, right? So I've given the levels also here. Then the Strait of Hormuz, right? Container ship attack near. So here I've given some important piece of trivias that which tankers has been waiting, how much oil they have carrying, right? So this is the important news, right? And this you'll find a lot of related developments to this news you'll find on the BMN Market Insights. Moving on to the next news, that is the RBA rate hike bets, right? So yes, a lot of good trading opportunities going to create into the Australian pairs, right? So the Reserve Bank of Australia Deputy Governor Andrew Hosser, right, delivered notably hawkish comments. Hawkish means they are going to increase the interest rates in the near future, right? Here I've given taken into consideration the lot of analysts what they are saying, right, from the Bestpac, Citi, Deutsche, right. So why it matters? A surprise RBA hike on March 17, then next Monday would be a seismic event for the Australian pairs. They might go up, right, if there is a interest rate hike probability, and vice versa is the case. So what you need to do, so odd USD is in a strong uptrend. The cleanest Forex trade of the week is buy on any pullback toward the recent breakout level. Trail stops tightly. Watch March 17 as a key catalyst for potential acceleration, right? So although the news are favoring that Australian pairs are getting stronger. Now come to the safe haven asset, which is the another safe haven currency, which is the Japan. Today we have the Japan PPI software plus the Bank of Japan expected to hold. Yes. So yen stays weak, and as a result, we might see that USD JPY or other JPY pairs, right, are right now gaining momentum towards the upside, or they're gaining strength toward the buy side. And this is moderate. So I'm not discussing the trader action, what you need to do, right? It's quite easy. Second, seventh number news is the Trump signals Iran war could end, right? Partial market relief. And that is the reason gold is not getting any clear direction because of this, right? This is the news which is impacting lot of people throughout the globe, right? So President Trump have made public statement suggesting the conflict with the Iran could be brought to a swift conclusion, triggering a partial relief rally. But if we see the other side of the Iran, they are ready for a prolonged war, right? So whom to trust, it's very confusing right now. Now, what as a trader you have to do, right? Monitor Trump's social media, especially the Twitter handles and official White House statement in real time, right? Set alerts for keywords like Iran deal, ceasefire, Hormuz open, right? A confirmed diplomatic development equals to buy equities aggressively, that is the indices and stocks, and close oil long positions immediately, right? And if this is the case, which I am discussing right now, this is exactly going to work, and we'll see the footprints of this into the latest commitment of trade report also, that the big players of the market have also done the same thing, right? So I'm telling you in advance that what you need to do as a retail trader. Now comes our favorite, that is the gold in a tight consolidation technical breakout setup. So I'm not going to discuss because we're going to put focus on the charts, and I want to show you a lot of things which I've identified, right? Long above 5208, this is the important thing, with targets at 5266 and 5320, right? Stop losses you can place below the 5180, right? Yes. Because of the volatile movement, and the impact could be very high because we have a very prolonged, very long, right? Sideways movement. So high probability of a very big movement is coming. And apart from this, we have a lot of important data also, right? So that is the reason keeping a big stop loss, small lot size would be very good, right? You know how much dollars you want to make from gold, right? It doesn't matter that you want to earn that dollar with 10 points of movement or 100 points of movement, right? You have to stick with your risk parameter. Same is the case with the silver, dual safe haven plus the industrial demand. So both the things are impacting. That is the reason we have given very aggressive volatile movement to be coming into silver as compared to the gold. Now in the last is the Bitcoin and the crypto, because of the energy driven macro stress, right? Because of the oil prices and natural gas prices are shooting up, right? Every major country is facing the energy crisis right now. So do not trade crypto in isolation today. Use oil and the CPI reaction as the leading indicator. So what oil is doing and what Bitcoin is doing, try to develop a correlation between both of them. You'll find a lot of free calculator to give you the right calculations, right correlation figures, right? So take into this consideration and then only think of taking the oil, right? Soft CPI plus the oil drop. So the CPI comes lesser than the 2.4% or maybe 2.4%, and the oil prices drop. This equals to BTC is going to get a rebound into the prices towards the upside, right? So the bounce is quite high. Hot CPI, that means more than the expectation, plus the oil prices also spike. Risk of sentiment is there. Again, it will continue to go down. Now comes to the sections 3. So this is not going to take too much time, just to give you an idea that what we've been expecting into the upcoming future. What are the exact timing according to Dubai? So these are the crucial time that you have to watch the market, and then you have to decide your trading, right? So for the Wednesday, that is today at 4:30 p.m., we have the US CPI, right? This is would be the most uh, aggressive event for today, right? That is the reason I've given the three red dots in the impact sections, right? Assets which are being going to be affected by this CPI data is the dollar, gold, silver, bonds, indices, and crypto. Then at 6 p.m. we have the G7 emergency energy meeting, right? This is also the most extreme. This is going to impact oil, forex, all indices, and the risk sentiment of the market, right? And in the webinar, we have discussed that there is risk on sentiment and risk of sentiment. Then we have the US federal budget and treasury statement. Yes, this is very important. How the US government is being accumulating, right? What their economists are thinking, right? How they are taking, how they are analyzing the market right now. So this is going to impact the USD and bond, and anything which impact the bond will have an impact on gold also. On Thursday, we have this four important data. So I'm not going to discuss this because we're going to discuss this at tomorrow, right? On Friday, we have this important. So these are the most important data which are giving you lot of good opportunity. Three opportunities today, four opportunities tomorrow, and then six opportunities on Friday, right? So a lot of trading opportunity you're getting. And in the next week also, I've given you for your future. If your any position got stuck, then what you need to do. This would be the timings, right? And this data releases. If you get stuck, you'll get the change in course, right? at this point of time. Moving on to the section 4, which is asset by asset trading strategies I've given. So I'm not going to waste time over here, right? Go through it, download it, give me a very good comment. And over here I've given you, right? If you're an intraday trader, from where you need to do, right? Like, let's discuss gold. Wait for the CPI data to release at 4:35 p.m. So off CPI, buy above 5208, right? Target should be this, right? So this is for the intraday. There are a lot of people who tend to hold their positions for 2 to 3 days. For them, I've given the medium term trend is bullish, and how they're going to place their entries, stop losses, and targets. So overall bias is bullish. So for each and every market class, I've given this. Okay. Now for the indices also, for the bonds also, very few people trade in bonds, but you have to analyze bonds if you're really trading into the gold prices, right? Now in the later part of the report is the section 5, that is the my intraday game plan for today according to the Dubai timing. So how I'm going to plan, right? So from 4:15 to 10 p.m. this is the dedicated time which market is asking me according to the Dubai timing. So at 15 p.m. I started preparation, right, for my trading setups. What exactly I need to do into that preparations, that review all my open positions if I am having any in the European zone, right? Set price alerts on gold and all oil prices, right? Once it is done, pre CPI caution, stop trading, try to analyze the market, then CPI release, then post CPI reassessment, how the market is reacting, right? In which direction they have given a fake breakout. Once it is done, then we have the pre G7 auction. Then we have the G7 energy meeting. So I need to watch the live news feeds, right, and try to process it to design my hypothesis. Once it is done, then the post G7 trading will start. And these are the positions which I'm going to retain into my account for a very longer period of time. That is 2 to 3 days throughout this week. Then the US equity session will start. So I'll watch good trading opportunities into the stocks and indices, right? Then the position management. That means in which specific asset class, how much do I need to invest, right? What would be my risk exposure, right? And now the section 6, which is the key risk to monitor, right? So number one is the CPI surprise, right? I've told you that what kind of surprise has been expecting. A print about 2.7% is the surprise for the market, right? Or below 2.4% is also surprise. G7 breakdown, then the news related to the Strait of Hormuz, Trump statement, Fed chair speculation, and any geopolitical escalation news if it is coming. So these are the news. If you find this kind of headlines, uh, so you need to take into consideration, right? And then decide your trading plan. Time zone quick reference for Dubai traders. So this is just for your knowledge purpose because we have clients in multiple locations. So according to them, whatever time frame I've given over here, you can use the offset timing and see that according to your geographic location, what are the correct timings. So this is all from my side. I tried to cover everything in a very great detail to give you the reference. Now let's move on to the technical chart, and that this is the last section of the report. In this, we are going to discuss the gold chart first. So this is my chart over here. You can see, right? And this is the gold chart. Just a minute. Okay. Now see, this is the gold price currently. Okay. Now first, let's discuss the previous day, that how the market have reacted. Although we have given this arrow, this unmitigated fair value gap is resting over here, right? Prices went up. We have given the call also. We have booked the profit at 5220, right? Then prices went up, exhaustion, taken the low of the previous candle, then again continue. So it's a short term uptrend movement, and from the fair value gap, prices again rejected. Now this point, this all circles are representing a continuous classic bearish divergence. That means whatever is the prevailing trend is getting weaker, right? Somebody is giving lot of supply into the market, and that is the reason prices are not able to sustain the upside momentum, and there is a change in course, right? And prices have reversed towards the downside. Now when the prices reverse to the downside, this red circles representing classic bullish divergence. That means from both these 2 points, right, lot of people are very active, and these people are not retail traders. These are the institutions, big money, because they have only that much power to absorb the liquidity which is coming into the market, right? So see, this is a bullish divergence. Right now, what happens that over here we have this low, and again the prices are trying to go below this level, and it is creating a hidden bullish divergence, which is underdeveloping, in underdevelopment phase right now. So high probability that all of a sudden there will be a fall into the prices. There are a lot of liquidity which is resting below this points, right? This red circles, which is at 5161 level, and all of a sudden from this we again have a reversal to the upside. So this is the thing which is coming out of the chart right over here. The important order block area would be at 5290. So from here also chances of reversal is there. We have the CPI and G7, and in that point of time we'll have the a very aggressive movement towards the upside. So that's all from my side, and this is the zone, right? Prices have breaked it, retested it, then again they are just sustaining above it, right? But there is no strength. So to have a clear buy signals, we need clarity, right? Just we need to draw this trend line over here, and it would be a symmetrical triangle formations right now, because this is the high, this is the low, and within this high and this low, prices are being trading right now. So any movement which is above the 5239 would bring more buyers into the picture, and that is the right time to take a buy call if you are a very conservative trader. And below this low, if you find a very good close, right, prices break this channel, then again retested it, and then again try to go down, then that will be the thing when the alternative scenario is going to get triggered. Now moving on to the silver, let's have a quick look. So this is the price point which been talking. This is the high which have been made. We have marked that we need a clear direction above this area to take the buy, but this doesn't happen, right? Prices move sideways, and right now still they are trading at this important support area, and below this again there is a support area. So this would be the dip. I'm waiting prices, and if I find a reversal from here, then I think of taking a sell call. And if things went very positive related to US Iran tension, then there will be a sharp fall into the prices, and prices will again come back into this area which I have marked over here, right? This by the arrows, right? And again prices will fall down, right? But yes, this would be the pivotal price point, which is at 85.54 and 84.73. Now, let's have a look on the energy prices, right? So this is into the 15-minute time frames, right? And see the market is moving sideways. They are also waiting for the current data. But now, let's have a look that this is the trend line which I've drawn, right? This green trend line. Prices try to break it, and again there is a strong surge into the prices toward the upside. Prices again retested it. Now, any aggressive move above this pivotal point, which is at 87.36, would be the time to take the buy call, keeping your stop losses below the low, right? And this is going to happen after the G7 meeting, and this is the opportunity which I've been talking about, right? So wait for this prices, or if prices again continue to go down and give you the close below this low, then you can think of taking a sell call, right? But by looking into the chart, and you can see that this is the head, this is the shoulder, this is the head, and this is the another shoulder, right? So it's a tilted head and shoulder formations over here, which is an inverse head and shoulder, which indicate a sudden price movement toward the upside, and prices will came back again into this channel which I've drawn over here. So the probability is quite high towards the buy side. Now let's have a very quick look on the USD JPY pair. So I've been told you that because JPY is getting weaker, so the probability that the prices might go up is quite high. And this is a very important zone which I might identified, right? This is a immediate resistance at 158.93. Any movement above it will trigger buy, and I'll think of taking a buy call, right? Any price movement which successfully give me the close below the 156.86 would be the time to take a sell call in the USD JPY pair. And this noise or this channel is going to clear after the CPI data release, right? Which is going to happen at 4:30 p.m. according to the Dubai timing. Now let's move on to the next section of the report, that is the Wall Street 30, and in the last we'll discuss the Bitcoin. So this is Wall Street 30. So we've been expecting prices to break this, take the reaction, and then again, if they continue to go up, then I think of taking a buy call. But from this important zone which we have marked yesterday, prices got a reversal, fell down. Then again, they have taken the correction. Right now, any movement below this swing low would trigger sell. So this would be the good area to take the sell call, keeping your stop losses over here, right? So almost 350 points of SL is being into the charts, right? And 350 points of movement towards the downside, I mean, expecting. But yes, this this should be the area. So if you have taken the sell call from this low, this should be the area where you should book your partial positions. That means your partial profits at this low point, right? From here, chances of reversal is there because this is a very important liquidity area. Now in the last, we have the BTC USD. So still I'm very much towards the buy side into the BTC USD prices. Although this candle successfully again given the close, now I need today's candle to bypass the high of the previous day. Once it is done, then I'll continue with the buy. If this candle successfully give me the close below the low of this candle, I am not going to take trades. But tomorrow on Thursday, again, if they continue towards the downside, that means this is just a time correction. This is the fake breakouts which happens, and prices will continue down, right? And the important thing which will give direction to this hypothesis which I've given is today's G7 meeting, right? And the developments related to the oil market, which is the Strait of Hormuz. So that's all for my side, right? I hope I have tried my best to give you the clear picture of the market. This side, Anurag, you can download the report from my official YouTube channel with the name My Mentor Anurag. In the description box, you find the PDF. And if you are the existing clients, just message us or visit the official Telegram channel of the BMN Insights. You'll find the PDF report which we have discussed today, right? So that's it, Anurag, signing off for today. Till the time, have a great trading day. Thank you, guys. Bye bye.